Welcome to the Sunday edition of the Tech Stocks Daily Podcast, where we dive deep into the latest and greatest happenings in the world of technology stocks. Google has announced that it will be shutting down the Google Pay app in the United States on June 4th, 2024. This strategic move aims to streamline its payment options by encouraging users to transition to Google Wallet, which is significantly more popular, being used 5 times as much as Google Pay in the US. Google Wallet serves as a comprehensive digital repository for payment cards used for tap and pay transactions, as well as other digital items like transit cards, driver's licenses, and state IDs. The decision means that users of the US Google Pay app have until June 4th, 2024 to transfer their balances to another bank account. After this date, they will need to use the Google Pay website for managing their funds. Additionally, peer-to-peer payments and access to in-app deals via Google Pay will cease on the same day. Concerning rewards from in-app deals, if you're awaiting cash back and the deadline passes, the usual reward payment timelines will still apply. Notably, it appears Google plans to redirect users to Google Search for deal searches rather than porting this feature to the Wallet app. Post June 4th, 2024, it's somewhat ambiguous what the exact functionalities of the Google Pay app will be. However, indications suggest it may simply provide a means to view one's balance without operational capabilities. To ensure security and convenience, it is recommended to transfer any balance to another account ahead of the deadline. It's important to note that these changes apply only to users in the US. In regions such as Singapore and India, the app will continue to function as usual. Google's decision reflects a broader strategy of simplification and consolidation in its approach to mobile payments. Google Wallet is set to remain the primary and default Android payments app, focusing on tap and pay transactions without supporting direct money transfers or offering cashback on purchases. The app also enables the storage of payment and loyalty cards, transit passes, and some forms of government identification. Looking ahead, it remains to be seen how Google will enhance Google Wallet, but the move towards a simpler, more unified payment solution appears to be a permanent shift following a decade of experimentation with various payment models. SentinelOne, Inc. Class A common stock made headlines today due to its promising yet challenging position in the cybersecurity market. The company, known for its endpoint protection software and services, is regarded as a growth stock that has plummeted over 65% from its all-time high in late 2021. Despite facing stiff competition in an overcrowded market dominantly held by players like CrowdStrike, Microsoft, Palo Alto Networks, and Fortinet, SentinelOne is carving out a niche for itself through innovative use of artificial intelligence, AI, to automate monitoring and remediation processes. SentinelOne is not just relying on AI, it's also making strategic moves such as forming distribution partnerships with managed security service providers, MSSPs, which could potentially strengthen its market presence, especially among smaller-scale businesses. Financially, the company has exhibited impressive growth, reporting a 42% year-over-year increase in revenue in its most recent quarter, alongside a promising net dollar retention rate of 115%. This indicates strong customer satisfaction and loyalty, underscored by a 24% year-over-year boost in total customer numbers. Despite these promising signs, SentinelOne's financial situation reveals that the company's net loss has narrowed from nearly $100 million last year to $70 million in the most recent quarter, with a significant reduction in cash burn. With over $1 billion in short-term liquid assets, the company seems well-positioned to reach a break-even point in the near future. What makes SentinelOne a noteworthy topic in the tech news is its current market valuation. After a substantial decline in stock price, SentinelOne's price-to-sales ratio stands at under 15, making it an attractive investment compared to its more expensive peers like CrowdStrike and Palo Alto Networks. Given the company's innovative approaches to cybersecurity, strategic business moves, and improving financial health, SentinelOne presents itself as a growth stock with significant upside potential, especially in the current bull market. This blend of challenges and opportunities places SentinelOne in the spotlight as a cybersecurity entity exhibiting resilience and potential for growth. Apple snagged the news spotlight today, not for a new product launch, but for its involvement in the unfolding drama between Google and Microsoft. In a surprising twist, Apple has thrown its weight into the conversation amidst allegations of Microsoft unfairly promoting its Edge browser and Bing search over rivals. Apple's participation signals significant industry concerns around competition and user choice, elevating the ongoing browser war to new heights. This unexpected move by Apple marks another chapter in the intricate dance of tech giants vying for dominance in the digital landscape. Now, we'd love to hear your take on Apple's involvement and the broader battle for the internet's future. Do you think competition among these tech behemoths benefits users, or does it complicate the digital experience? Drop your thoughts in the comments below, and let's get the discussion going. Given today's news, if I were to pick one stock to discuss, it would be SentinelOne Inc., Class A common stock. Based on the information that the stock tumbled 19% due to weak revenue forecasts, despite an earnings beat in the fourth quarter, my inclination would be to hold. This decision comes from the perspective that while the weak revenue forecast has clearly influenced investor sentiment negatively, leading to a drastic drop in stock price, the company's ability to beat earnings expectations indicates operational strength and potential resilience. The tech sector, especially cybersecurity, is volatile and reacts sharply to both positive and negative news. However, the fundamental need for cybersecurity solutions in an increasingly digital world suggests potential long-term growth for SentinelOne. Before making any decisions, it's crucial to remember this analysis is based on current news and not a deep financial review. Therefore, I encourage listeners to conduct their own research, consider their investment horizon and risk tolerance. Remember, this is not financial advice, but rather an analytical perspective based on today's news. Financial disclaimer: this discussion is for informational purposes only and should not be taken as financial advice. In a lighter, yet intriguing piece of news, Google had to jump into damage control mode after an email message claiming that the Gmail service would be closing down on August 1st went viral. This email, seemingly from Google, was realistic-looking enough that it alarmed Gmail's vast user base, claiming that from August 1st, Gmail would no longer support sending, receiving, or storing emails. Google was forced to clarify that this alarming news was in fact a hoax, after the message sparked widespread concern and confusion among its 2 billion account holders. This whole episode led to a clarification from Google amid speculation and buzz on social platforms, reminding us of the power and potential pitfalls of viral misinformation in the digital age. Wrapping up today's market activity, it was a day filled with noteworthy shifts and significant announcements. Google's revelations stirred the tech community, impacting Microsoft users and fueling the ongoing browser war. Meanwhile, Microsoft's ambitions to strengthen Bing's position against Google have raised critical industry conversations about competition and user choice. SentinelOne Inc. stock took a notable hit due to pessimistic revenue projections, displaying the volatile nature of the tech market. And not to forget, Apple's involvement in the Gmail hoax story added extra layers of intrigue to today's tech landscape. If you found today's video insightful, please don't hesitate to hit the like button, subscribe to our channel for your daily dose of tech news, and share this video with others who might find it valuable. Be sure to come back tomorrow for another round of comprehensive updates from the world of technology stocks. Your engagement helps us bring more of the content you love, so spread the word and let's keep the conversation going.